you so much for being here bright and early. Before we get started, I wanted to say a big thank you to all of the staff and the events team who have made day one and already day two just incredible. Hope you're all feeling rested from the party last night. I get to go to a lot of Ripple events and celebrations, and nobody parties harder than a bunch of academics with an open bar. So it was a lot of fun, and great to get to meet and see many of you over the last day. So I'm Jonathan Perri. I'm the Senior Manager of Global Social Impact here at Ripple, and very excited to engage in this conversation with Kenneth, who's the head of Venture Labs at Mercy Corps Ventures, a close partner of Ripple Impact over the last 3 or 4 years, where we've been working on a number of pilots and programs together. But so Mercy Corps Ventures is the impact investing arm of Mercy Corps, the global humanitarian aid NGO. They are working in frontier or emerging markets to empower and invest in entrepreneurs who are building solutions for climate resilience, financial resilience, often referred to as financial inclusion. And they work with these entrepreneurs and companies from seed to scale. Each year they vet around 1,500 startups, so they have really unparalleled exposure and understanding of these ecosystems, where a lot of these builders are turning to Web3. They're turning to blockchain and to crypto and decentralized finance to find solutions for expanding access to financial services. And to date, Mercy Corps Ventures has invested in 50 companies. Largely, these are fintechs, half of which are founded by women. The products and services that those companies are providing have reached more than 4 million people. And excitingly, those companies have also received almost $500 million, around close to $500 million in follow-on funding. So companies that pose a lot of success. Often when we're talking about financial inclusion, we are referring to increasing services for the unbanked and the underbanked, and we're going to talk about some of that. What we're also going to talk about is the funding gap. So there's about a $3 trillion funding gap, that's USD, for startups in emerging markets, countries within Africa, Latin America, Southeast Asia. And stepping back a little bit, I think, as probably everyone in this room has seen, I think there's been a lot of hype over the years around the potential for blockchain and crypto, and a lot of overpromising about some of these solutions to really move the needle on financial inclusion. What I love, what Ripple loves about Mercy Corps Ventures and the work that Ken does is they are frankly cutting through that hype. And the slideshow that you're seeing behind us are photos from real entrepreneurs that they work with, that they've invested in, pilot programs that they've conducted in these markets. So it's a little bit of a setup there, enough from me. Excited to introduce Ken, and please have us tell us a little bit about Mercy Corps Ventures, what you do, the markets that you're investing in and working in, the pilots you're conducting, and what goes into deciding, where Mercy Corps Ventures is going to work.
Cool. Thanks, everyone. Thanks for the intro, John. Grateful to be here. Ripple's been a really supportive partner for us the past few years, so it's always nice to be able to be part of the Ripple ecosystem. So as John mentioned, we are, I guess it's a little bit, like the structure is a bit unique. We are an impact VC housed within an NGO. And so you can think of us as being like your typical venture capital arm, but just so happens to focus exclusively in Africa, Asia, Latin America, and then with a very strong impact mandate in everything we do. Meaning, like the companies that we screen, we have to put them through an impact due diligence and make sure that it's compliant with different regulations, our own IC, our expectations around what a company can and cannot do with respect to different global standards. We got into this work because About 10 years ago, Mercy Corps Ventures was founded. So Mercy Corps as an NGO has been around for 50 years. And a lot of the work that Mercy Corps was doing was around supporting local communities, working with local startups, or even like training and incubating entrepreneurs. And then what would happen was like after like really brilliant idea would be founded, or perhaps like a business would start, we didn't have the vehicles or the modalities to continue supporting them. And so then it became clear that, all right, maybe like a venture arm would be beneficial so that you could actually catalyze, close that funding gap that John was mentioning. Can you provide them with capital? And that way, you can help these entrepreneurs scale. And as John was mentioning as well, we do have a very strong bias for local, like proximate and female-founded organizations. A lot of research has gone to show that if you are local to a problem, you have a much better understanding of user needs. You can build much more relevant products. You know how to support your communities better. And then similarly, a lot of research around how female-founded companies are much more successful for whatever reason that may be. And so our portfolio is about 50% portfolio companies have a female founder. The global standard in VC is around anywhere from like 2 to 10%. So depending on where you're looking, we certainly have a really strong bias for making sure that we have a representative and proximate portfolio around the work that we do. The Venture Lab work, which I lead, is focused on developing and launching first-of-a-kind solutions in emerging markets. So this is typically done in the form of you can call it like a pilot, if you will. Meaning we'll work with tech startups, again, local to the environment that we are trying to work in, and deploy innovative tech, and often in this case, Web3, crypto, and work with them to launch new products or new solutions that will help to increase financial and climate resilience for the people who are underserved in these regions. So just like numbers-wise, 1.4 billion people in the world are still unbanked. With climate change, 3.3 billion people are vulnerable to the effects of climate change for their daily lives, meaning like your income might be disrupted, your schooling, your housing, whatever it may be. And so our work is all centered around, how can we better serve those populations? And so what we found is that like innovative technologies such as crypto, there is a huge opportunity here. As people here, you're not strangers to this fact, but that's an area where we've been going really deep. So we've launched almost 20 pilots now. This is a little bit outdated, but almost 20 pilots that are just testing what are those crypto use cases that can meaningfully make a difference for financial inclusion and climate resilience in the global south.
And thanks for touching on the Venture Lab. I think there's something interesting happening amongst global humanitarian aid NGOs. Mercy Corps has Mercy Corps Ventures in your Venture Lab. UNICEF has an innovation lab. The UN World Food Program has an innovation program, all of which are looking for and funding blockchain and crypto projects to help them in their humanitarian aid programming, their humanitarian aid delivery. Why do you think blockchain and crypto are kind of being embraced by these large-scale NGOs right now?
So there's like a cynical answer, right? Which is like that's where the money is, and so the NGOs go there. So I think there's some truth to that, I'm sure, but I think there's also just like a practical component to it as well, which is around. I think there's a realization among technologists that work within these organizations that there's a new frontier of tech, and stablecoins, just as like one example, represent a radically improved way to deliver aid in these markets. I know we're going to touch on this a little bit later, but for those of you who aren't familiar with humanitarian aid operations, I think there's like this mental model, which is like, oh, we're going to go build a school, or we're going to go, build some houses or something, plant some trees. That's like the old mental model around how humanitarian aid works. In practice now, maybe like the last decade or so, there's something called the Grand Bargain, which happened in 2016, where humanitarian organizations around the world decided that where possible, we're going to use cash first. So meaning like we're going to give people unconditional cash so that they can decide what they want to be investing in. It respects people's autonomy, their agency. It gives them, there's a level of dignity that's implied there rather than just flying in and saying, we're going to build you a school without thinking about any other issues on the ground. And I think with this piece around the grand bargain, as aid organizations move more towards giving cash, like moving cash from the US or HQ to Afghanistan or Myanmar is extremely difficult because you have regulations, you have in market, you often have like in the case of Myanmar, you have a military junta, which is like governing and overseeing all the banks and all the telcos, and therefore they're also kicking out a lot of the NGOs who are trying to do work there. So just getting money into these countries and delivering aid is very difficult, if not impossible in a lot of cases. And I think stablecoins are actually representing a lifeline for many of these markets. And so we've been doing some work around this in Afghanistan and Myanmar. I guess there's specific examples because we've actually been piloting some solutions there. And it's just, I think aid organizations are coming to the realization that there are better ways to do this. And so obviously a lot of like questions that still need to be answered. How do you set up your treasury team to do this properly? How are you compliant with like financial regulations? That's all obviously like a huge can of worms. But I think there's much more momentum to say like we're going to try new solutions. We're going to try to figure out like how can we leverage tech to respond better.
Yeah, as I've learned more and more about some of these programs too, the problems are so clear. There's photos of humanitarian aid trucks filled with cash as they're delivering them, and more and more NGOs are now looking for digitizing those programs and those solutions to avoid those scenarios. Mercy Corps Ventures has now conducted around 20 pilots, end-to-end pilots, helping with the design, the implementation, and then the reporting on those. Everything from tokenizing and fractionalizing government bonds, stable coins for savings, smart contracts and stable coins to send anticipatory cash transfers. That's one we're going to dive into in a minute. But that pilot specifically was with Diva Donate, Fortune Credit, a couple of other partners, where smart contracts were used to facilitate anticipatory cash transfers, meaning a lot of time, as Ken was describing, when we think about humanitarian aid, we wait until that natural disaster happens, until that conflict happens, and then we're scrambling to get aid in. But you're exploring, testing, how we can use blockchain to actually deliver aid before a climate disaster strikes. Can you go through the details of that pilot?
Yeah, of course. On the humanitarian aid point, as I was saying before, right, like cash is now, like it's cash first is the general thinking around how humanitarian aid organizations should work. Now, it also so happens that 99% of humanitarian aid is reactive, meaning like tornado hits this area and okay, now we deploy funding or now we send the people on the ground to help support. Despite the fact that 55% of disasters can be predicted now, with AI, with like machine learning, satellite data, ground truthing data. Like we have the technology to actually predict, or let's say forecast, when the next climate disaster is going to hit. This is not surprising, right? Like you look at your phone, you know when the rain's coming, roughly. It's not perfect, but within some degree of confidence interval. But for a variety of, let's say, political reasons or just like legacy structural reasons, most humanitarian aid is still not proactive. It's not anticipatory, despite the fact that the research that's been done on it is that anticipatory aid has a 7-to-1 ROI compared to reactive aid. Meaning, if I give you $1 today to invest in, buying supplies before a storm hits, or moving your cattle inland before the flood comes, or fortifying your housing so that the storm doesn't knock it down, it actually leads to much greater benefits and much higher ROI than if I just gave you that money after the storm has knocked down your house. That's kind of logical, right? Like prevention is much better than like responding to something after the fact. And so anticipatory action, it's a clear reason, like a clear initiative around how humanitarian aid can be better. Now, how would you build a system around this? So one is you need to obviously be able to forecast the climate disasters, and so that's what a lot of this climate analytics is helping to solve. But the key here is you need to be able to, like once you've identified a climate disaster, you need to be able to send money very quickly to these places, right? And if you use Swift and like you want to go from like say New York to rural Somalia, like you're switching through 4 banks, you are cashing out in maybe Kenya, and then you're bringing cash across the border, you're trying to get to the rural areas, you're trying to locate your farmers. I mean, there's a lot of steps involved. You're looking at least like a week in a good situation, right? This is an area where we tested with stablecoins. We worked with a data oracle, we worked with a smart contract developer, and a local microfinance institution in Kenya to serve pastoralists in like a rural region of the country. And stablecoins, as you would expect, like as long as the infrastructure is working properly, you can get all that money out there in seconds, right? Like it's code. So based off of, we were using NDVI data, which is vegetation, but you could use any weather data system. Based on certain triggers that you can preset in a smart contract, you can then trigger the funds to be deployed or dispersed immediately into that partner wallet. So we were able to send that money directly to the local MFI, the Microfinance Institute, and then they had a local bridge, and then that money was deposited into the mobile money accounts of the pastoralists that we were working with in the program. So, you talk about going from a week to like, minutes to getting that money out there, rather than paying 10% in fees, because, all the like Western Union fees or like Swift fees, whatever you're paying, it's the cost of some gas, and then the cost of your bridge to cash out. And so I think we cut that down by, it's one of the slides that's circling around, but it's 75% reduction in transaction costs and about 90% reduction in transaction speed.
I think that's one of the more exciting pilots that you have run so far, and one that I really hope to see scale up across different chains and in different situations. The second one is with a company called Ajara out of Cameroon. I had the pleasure of meeting this team earlier this year and talking with them. But Ajara is one of the female-founded companies that Mercy Corps has invested in. And in addition to the investment, you ran a pilot tokenizing and fractionalizing government bonds to make them more accessible to people who, in often cases, had not participated in any form of savings or digital savings, and otherwise wouldn't have access to buying those bonds if they hadn't been fractionalized. Go through the details of that one for us.
Sure. So context, Cameroon, as John mentioned, so a little francophone country in West Africa. 9% of people in Cameroon have accessed a savings product from a financial institution. So 9%, right? Stems from a lack of options and also a lack of trust. So typically, like if you have any spare money, let's say you are a middle-class person, you've got some money lying around, your options are pretty bad, but you could say like, put the money under the mattress. This is a country that has like 6% annual inflation, so obviously you're losing value. You can put into like a rotating savings group, like a tontine. And then, but the issue with that is like, you put your money in today and then there's 10 other people. And so you get the money back maybe in 6 months or in 10 months, right? So there's no real liquidity there. You don't actually get access to your capital. And again, no interest. Or you can actually, even worse, you can pay someone to hold on to your capital for you. And then that's a negative interest rate. So, I mean, that's typically what we're looking at with respect to this. Now, obviously, like those of us who are not in Cameroon or like those of us who have access to, I guess, better financial products, you can just click on your Robinhood account or whatever and like buy some government bonds or buy some equities. And that way you shelter yourself from inflation, you get exposure to the market, all the good stuff that people talk about. But yeah, that's not an option there. And so with government bonds, there's 2 real hurdles for a user in Cameroon. One, you need to have an asset manager license to actually acquire them. So it's not something that's been made available to retail investors. And then 2, there's no, like the minimum denomination was about 1 million CFA, which is about $1,600 US. So obviously not accessible to your average like middle-class person in Cameroon. And so what Ijara did, and this was part of the pilot that we ran with them, they have an asset manager license, so they are a fintech startup operating across Francophone Africa. And they were working with the central bank in Cameroon, and they were buying these government bonds and then putting them on chain, so tokenizing and then fractionalizing them. Fractionalize them, you could fractionalize it to whatever denomination you wanted. They so happened to do it to 1/1000th. So instead of $1,600 to buy in, it's $1.60, and therefore it becomes much more accessible. And this became a savings product that they offered to their users. And so you've got, in the course of the pilot, it was 11,000 people bought into it, saved about $250,000 over that period. It's since scaled to, I believe, 30 or 40,000 over the last 6 months. And then over $500,000 has been saved in there. It's just giving people access to a savings product that they otherwise would not have access to. There's actually a slide, if you could jump 2 slides, there's actually some data on this that I don't remember off the top of my head, but I think it was like 46% of users were accessing a savings product for the very first time, like not even just like at a financial institution, like going anywhere. Yeah, I think that covers. But yeah, it's really just around like tokenizing real world assets and things like that.
No, I think the tokenization and fractionalizing of real world assets to make them more accessible is one of the more, I think, exciting financial inclusion developments or experiments that we're starting to see take place around blockchain and crypto. So, all right, we're coming close on our time here, so we'll go through these ones a little more quickly. But pilots and investments, how do you decide and measure? Well, how do you decide where you're going to invest or conduct a pilot? What's the criteria there? And then once you're done with an investment or a pilot, what does impact measurement look like? What are you measuring to ensure, to consider if this was successful or not?
In terms of where we decide to invest or pilot, it's still anchored around like our thesis of building resilience for people in underserved communities, which I know it's a broad thing, but in our world, that's climate resilience, that's financial resilience. So we try to identify solutions that we feel like can meaningfully move someone from A to B. How can we build their resilience so that if a climate disaster strikes or if a financial disaster strikes, they will be protected from the effects of that shock. So yeah, I think that's like super high level, but we work across fintech, ag tech, climate tech, and just really identifying the solutions that can be supporting that. To the impact measurement piece, which I think ties really neatly into this. So when we're doing this screening and when we're trying to identify, are we doing this well, there's a few different parameters that you look at, and this is aligned with a lot of like global best practices like what the GIN has or like the 5 dimensions of impact. So for example, like who are we reaching, right? What's that population that this product is serving? Are they low-income individuals? Are they smallholder farmers? Are they refugees? Are they female-led households? We want to make sure that we're staying within the focus of who we're aiming to support with the work that we have. And then one parameter is around depth. So like maybe I should start with scale, right? Like, obviously, how many people are you reaching? Like, is this product reaching like 5 people, or is this reaching like 1 million people? And obviously, there's differences in the consideration there. But then the counterpoint to that is depth. So, like, it's great to reach 1 million people, but if you're barely giving them anything useful, then like, does it really matter? So then, we want to make sure we're counterbalancing that with saying that there's we're reaching a large scale of people, but making sure that we're going deep with them so that they're actually building true resilience.
Yeah. Stablecoins seem to be, a hot topic here, frequent topic, an exciting topic for Ripple, and seem to be incorporated increasingly in the pilots that you're conducting and the companies that you're investing in, whether they're doing payments or focus on remittances, savings. What are your thoughts on your projections for stablecoins to be increased in use in these markets?
It's kind of a no-brainer, right? It's like, why wouldn't you? If you look at like Chainalysis' report on the global adoption of crypto, of the top 20 countries, 17 are in like the global south. This is like Nigeria, Argentina, Vietnam, Brazil, like countries like that, right? I think there's a clear product market fit that's happening in these places. Like you don't have access to valid or let's say secure financial products, and you're looking for safe haven, you're looking for a better alternative, and that's where like a foreign denominated stablecoin comes in. Or like, you need to send money across the country, but the banking infrastructure is just not very solid. Again, stablecoins come in. So I think it's very, very sensible, like why a lot of the startups we look at are incorporating stablecoins into their work. We actually speak with a lot of the startups that are thinking about it, and obviously we don't push and say, oh, you should do this, but I think when there's a clear financial use case around it, I think a lot of people just will gravitate towards stablecoins, because I think the realization is that the product features are just so much superior to what else is on the market.
Is that largely USD backed, or are there other backed ones you're seeing come up?
Yeah, you do have smaller locally denominated stablecoins. So like there's one for this, like the Francophone, the West African franc. There's one that's coming up for the Ghanaian cedi. There's one that was released for the Kenyan shilling. They're coming, but in terms of actual like total value locked, or like the liquidity is, I think it's like 1% is non-USD and the rest is USD. So
yeah, makes sense. All right, we'll leave some time for Q&A, but want to close out with maybe a bit of a call to action. We've got some incredibly brilliant minds here who are conducting research into relevant aspects of blockchain and crypto. Mercy Corps Ventures is launching, or has launched, a new humanitarian venture lab. So a little less focused on these financial use cases and more focused on humanitarian aid innovation. How can universities, well, tell us a little bit about that lab, and how can universities get involved with Mercy Corps Ventures or collaborate?
The Humanitarian Venture Lab, it's focused, it was related to the anticipatory action pilot that I was speaking about earlier, but it's testing like what are the solutions that are at the frontier of humanitarian aid. So how can crypto be deployed to actually improve how humanitarian aid is delivered around the world? And so we're working a lot with other NGOs. Like we work with Mercy Corps country teams, of course. Mercy Corps is active in 40 plus countries around the world. So we work with them, and we work with other NGOs trying to figure out, what are the pilots, what are the use cases that we can run that have potential to scale, and then how do we crowd in funders to say, okay, we're okay, like we are no longer scared of crypto. We can say like, all right, we are approving the deployment of some humanitarian aid using crypto. So that's one of the big goals around the Humanitarian Venture Lab. For universities researchers, with all of our pilots, we do rigorous impact management and measurement. We want to make sure that what we do is objectively measurable to say that it's actually improved people's lives. Like the data that was on here, like we're not doing that ourselves. We've been working with research partners like 60 Decibels, Crypto Council for Innovation, among others, just to figure out like, okay, how can we prove out that this has actually been impactful? And so I think for researchers, like those of you who are working in this space, like please do reach out, let us know what you're looking at, and see if there's an intersection. Okay,
great. Thank you, Ken.